Hello everybody, my name is Paul Holland. I'm the Managing Director for Fleetcor's UK fuel card business. Today, on this short video, we'd like to talk a little bit about the global oil price and the impact that that has, particularly for fleet operators. Why the dramatic fall in the cost of oil over recent months? Well, at the start of the year, the cost of fuel was around $70 a barrel, and today it has fallen to just under $20. And this is largely because of the impact of coronavirus, which has been prevalent in driving an unprecedented fall in demand for oil across the globe. A second component, up until the last 10 days or so, has been a significant battle between two of the leading global producers of oil in Russia and Saudi Arabia, who have both been battling to put more fuel to market to maintain their own oil revenues. Significant factor, which actually came to a head a week or so ago with an agreement to cut production by about 10%. Over the last 24 hours, there's been a lot of profile over this notion of negative oil prices in the US, effectively suppliers having to pay to offload physical oil product. And the reason for this is actually a technicality, which is driven by the fact that oil traders trade fuel many times before it gets to its end destination. And because inventories are so high, the reality is there is very little place to put surplus stock. So to offload physical product, which somebody has to take delivery of, people are actually paying people to take that stock rather than to be lumbered with that physical product, which they will have to stock themselves. So for consumers and for businesses, it has zero impact. Nobody's going to be paying a business to draw fuel from a gas station. This is all around the upstream supply cycle and the various trading dimensions that happen. The reality is our prices at the fuel pump will continue to fall for the foreseeable future as they catch up with the commodity cycle, but no one's going to pay you to take the product. Over the next few months, it's difficult to see the cost of oil falling any lower than we're seeing today. It might fall some, but the materiality at the pump level is going to be quite low. In fact, today, the traders are predicting that the fuel price over the next 6 or 8 months will increase by about 5 or 6 pence a litre. Clearly, the market is incredibly dynamic, lots of volatility. So what actions can fleets take? Well, it's very dependent on the profile of the fleet. The largest fleets operators, the largest buyers of fuel, the largest truck operators, a lot of those guys are buying on indices that are linked directly to the commodity cost. So on a day-to-day basis, they are literally tracking the market. And to all intents and purposes, there's not a lot to do other than follow the market. When you're buying on a different mechanism, largely the pumps, which many Allstar customers are, for example, brand is quite significant. The brand pricing strategies are very, very different. So it's always worth looking at the brands where you buy fuel. Another critical component is control. What you can do, you can control the amount of fuel you use a lot easier than you can control the price you pay. You'll never negotiate a 10% reduction in your fuel price, but you may be able to save 10% in the amount of fuel that you use. And you can do that by a range of mechanisms. You can implement controls on drivers. You can have league tables and track people's consumption and benchmark them against each other. You can introduce velocities so that people can only fill up at certain times of the day or certain frequencies. All of that stuff, which helps to give you increased visibility of what people are doing. And obviously through consolidated invoicing and reporting, you can see all of that profile and make decisions on what you do with your fleet going forward. And finally, the fuel market is always going to be volatile. There's significantly downward trends at the moment. That will change at some point in the future. And the best thing that you as a fuel user can do is just stay close to the market. Look at what's happening. Follow things such as these kind of broadcasts, which give you the insight, and obviously stay close to your fuel supplier.